At the end of March in 2021, there's going to be some significant changes to CFD trading. This includes not only stocks, but crypto, indices, Forex, and commodities, which pretty much affects everyone that's watching this video right now. I'm going to highlight the major changes that's coming in 6 weeks' time as ASIC imposes its new regulations. So what's changing? The first thing that's changing is new accounts. Anyone who signs up after 28th of March in 2021 will no longer be able to receive any kind of gift, discount, rebate, trading credit, or any kind of reward for signing up to a CFD provider. So there's not going to be any more incentives like $100 refer a friend referral, any kind of bonus to credits, like when deposit $5,000 and you'll get $200 bonus, nothing like that. Even the discount that I offer through the referral code, which is in the video description below, it's a 10% discount on brokerage. So instead of 10 basis points, you can get 9 basis points. That all goes away after the 28th of March in 2021. If you sign up beforehand, you get to keep any gift, any discount, any rebate, or trading credit. So this only affects new accounts that sign up. The one that's going to impact us the most is the changes in leverage and margin requirements. Forex is arguably just going to be untradeable. From 200x leverage to 30x leverage, it's a significant change. Now, I don't oppose the change. I think the vast majority of retail traders lose money in Forex. So I'm kind of okay with it. But it does push Forex into this realm of wealthy retail traders only, and really sort of negates any opportunity for newer traders, because really the kind of money that you can make with 30x leverage on a major Forex pair with like a $5,000 account is effectively very little. Now, the one that impacts pretty much everyone that's going to watch this video is the shares or underlying assets. Instead of 20x leverage, it's now going to be 5x leverage. This probably doesn't affect a lot of us unless you're trading something like Fortescue Metals, FMG, or Zero, which is XRO. Those are sort of the two big names that almost kind of require 20x leverage to trade to get any kind of good profit out of them. I do think this disincentivizes trading the large cap stocks and the blue chips and really pushes people towards the micro and small cap space, where effectively you get no leverage anyway. So really, it's pushing retailers away from the larger caps and into the smaller cap space. And really what it does here, from going from 20x to 5x, I don't think is a big deal for most people. Most stocks I trade are 10x leverage, so really I just got to put double the margin. It's not overly terrible. I'm not sure that this actually protects newer traders. And cryptocurrency is changing from 10x to 2x, but if you leverage crypto, you kind of get what you deserve. And the other final major change that's worth pointing out is margin closeouts. If the capital that you have on your platform is less than 50% of the required margin, it will just get stopped out, which I think is a good thing. Some platforms already do it, but in this case, it will be a flat 50%. Anything below that, instant close out of position, which I think is good. Negative balance protection is fantastic. So you can only lose what's in your actual account. Now, I'm not sure how this affects brokers, but I think that's going to amplify the risk from their perspective. So why are these changes actually occurring? Why is ASIC being so tough? Well, they did a report back in 2018, and I think these numbers are extremely low compared to the reality. But in terms of CFD and margin Forex trading, the numbers are not 63% and 72%. Forex traders are more like 75 to 80% that do not make money. The vast majority lose. So 63 is a little bit low. I'm not sure where they got that number from, but in the EU, it's a regulatory requirement to display, for brokers to display what percentage of their clients lose money, which I think is really good. But from what I've seen, Plus 500, eToro, IG, all these sort of platforms and providers, I've seen roughly 75 to 80% lose money. So I'm not sure why this number is so low, but it's good that ASIC is stepping up. The biggest driver behind these changes is COVID-19. Now, here are some pretty scary statistics. So between the 24th of February to the 3rd of April in 2020, that's basically a 2-month period, maybe 2 months and 1 week. The average turnover was 3.3 billion. The 6 months prior was 1.6 billion. So that's more than double the 6-month period average in the space of 2 months during COVID. So that's a very, very scary amount to see. And the factors that were contributing to this is there was 3.4 times more new accounts being created than before the pandemic. ASIC identified 142,000 dormant accounts that entered the market again. Dormant accounts typically have next to $0 on them. They might have $1 or $2 left. Basically, traders that signed up at one point, lost money, and now decided to come back because of COVID and the volatility, thinking they can make easy money. And the scary part is they made up for 21% of all active traders on the ASX. So from a 1 week period in March, retail CFD and Forex traders lost $428 million. And in that same week, 5,500 Aussies went into negative balance, amounting to $4 million in the negative. That's just over $700 per person that went into the negatives out of those 5,500 people. Keep in mind, there's some of those traders are just only like negative $100 maybe, and some of them will probably be negative 20K. So there's a lot of people that would have really not expected to be in the negatives and probably didn't have good risk management. Also, ASIC determined that between 56 and 63% of retail traders were losing money. I think that is extremely low. I think it's more like 75 to 80% of new retail traders would have got slaughtered, absolutely slaughtered. And they lost in that 5 week period $774 million amongst the retailers. So that's a really scary statistic. So guys, I hope that highlights the changes that are coming and why they're coming as well, and how they impact you and me both. So guys, thanks for watching and have a good one.